try and understand what the commentary is, what is the outlook, and what's got the street so excited about the stock today. We have Mr. Jairam Sampath, the whole-time director and CFO of Kaynes Technology, joining us on the show. Mr. Sampath, hi, morning. Your quarter 3 performance was impacted by the deferral of the 300 crore rupee Kavach order and some execution delays too. How much of this revenue is now expected to shift into quarter 4? How much of it will spill over into the next financial year? And what gives you confidence on the timelines?
So fundamentally, the entire business for the year is likely to be about 4,100 crores or so. We're going to have a slightly bigger Q4. While the Kavach thing that you're referring to, the railway product, which we have deferred ourselves by trying to bring in the new revision sometime in the next year probably. So we are, without this itself, without this particular order, which was earlier part of our plan, we are going to cross this 4,100 crores or so of total business. And if we are able to get this approval earlier on for the new revision, then perhaps we could probably update you with a different number.
Okay, and Mr. Sampath, let's talk about your net working capital days. We've seen a hike over here to 139, led by receivable days rising to 139 from 73% on a year-on-year basis. If you could help us understand if this is largely project-related, if it's temporary in nature, and does it reflect a structural change in customer payment cycles?
Actually, there is an improvement that we had hoped for, because there were some steps to be taken both in the inventory portion as well as the receivables portion, which got a little long, which has taken a little longer than what we anticipated. So there is no deterioration. It's just that there's an improvement that we could not bring to bear on our performance in the third quarter. In the fourth quarter, of course, we are committed to do that, and we hopefully will better the net working capital of 85 days, which was last year's number. So we would be somewhere between 70 and 85 days. In the connected point, which is to the net working capital days, is the cash flows. So we're also going to, almost in the Q3, if you see the standalone basis, we are almost cash positive. Just about 55 crores of minus cash is there. And hopefully by end of the year, we will have, on a consolidated basis itself, the operating cash flow positive. So both are possible because we have worked with our customers on trying to get supply chain financing and slightly better efficiency of collection by making sure that we follow properly. And the second one is, of course, the inventories. We have also now taken stock of all the orders, etc. And then we are more sharply focusing on the scheduling of the product so that we don't have parts inventory which is not usable in the current period. So by end of this year, we would better the net working capital cycle of last year, 85 days, maybe a few days only this time. We may not make quantum changes, but at least in the coming year, that would certainly help with the newer businesses having lower net working capital. And so on a consolidated basis, next year, definitely the situation will improve.
Okay, and Mr. Sampath, help us understand that despite a 50% year-on-year jump in your order book, which is now at around 9,100 crore rupees, overall top line, the revenue has remained largely subdued. What is the current visibility on order to revenue conversion, and are execution challenges still persisting across your key projects?
Yeah, so that's an interesting question. See, fundamentally, our revenue grew in the 9-year period by about 37%, a tad lower than what we thought it would. And that has got a definable product wherein we said that we have deferred ourselves the next revision implementation. So because of that reason, so in our business, sometimes quarterly basis, there'll be some shifts of revenues. But the order book is really the leading indicator of the business, which shows the strength of incoming orders on a monthly basis. And so that seems to be going strong, and we expect that to continue to go strong. So order to bill ratio will still be about 1.5 years or so. roughly about 9,100 crores, typically represents 1.5 years worth of orders on an average, um, based on our past performance. So I think it remains similar. So you will see a significant ramp up when the order book gets updated with semiconductor and PC board orders. Right now, those are all on the MOU stage, and the moment we start shipping commercial production, we can then onboard those orders into our system. So the order book to billing ratio is improving, and next year it will be further improved because of the newer businesses. Orders will also come in and will start. So it remains at about 1.5 years average.
Okay, so we're also looking forward to that improvement that you've just spoken about, Mr. Sampath. But after revising your FY26 revenue guidance from 4,500 crores to 4,100 crores in Q4, you would need to deliver around 1,700 crores of revenue to be able to meet that target. How confident are you about achieving this number, and what are the key drivers that give you visibility on what the execution is going to be like in Q4?
Yeah, so we already 1 month completed, and the numbers are quite encouraging. So the kind of year-on-year growth that we are expecting, I think, will happen now. So this year we will certainly end with a higher than normal proportion of the Q4 numbers. As you know, this is our growth is twofold. One is existing clients grow at X percentage, and then we add new clients. They happen to be also new businesses. So we hope that we will certainly achieve this number of 4,100 crores or so of total top line, and so whatever is required in terms of um, uh, Q4 revenues plus also the profitability. So we are saying that we will remain profitable at similar levels and slightly better than last year. So it's about 16% EBITDA is what we are looking at. And right now the orders stack up in that manner. So there are new products and then there are these existing products. So always the new products, the behavior is sometimes they come a quarter early or come a quarter later and so on. And that's what seems to have happened in our case.
Okay. And Mr. Sampath, on the OSAT side, when should we start seeing these orders meaningfully reflected in your order book? And if not in the near term, if you could give us a timeline by when do you expect these order inflows to ramp up in a big way? How should we be thinking about the impact of OSAT on expanding your long-term revenue ceiling?
Absolutely. So that's a very good question, because OSAT, we've probably one of the last to get our approvals from the central government. Now we have also signed the FSA. We've got 3 customers on board, and this year we will continue to make sure that the customer approvals are in place so that next year we can do a significant capacity utilization of the phase 1 as it would be. That will be like half the capex that we will expend. So in the coming year, let's say FY27, we will start having from the first quarter onwards the commercial billing happening in OSAT, and we think that that's going to add. One thing is that it's going to add a new series of orders, like I mentioned that. So order book will probably start getting populated by Q1 of FY27. Plus, it will also have collateral benefits for us, because many of the players in the OSAT business, they also are looking for not only OSAT companies, but they also look for companies which can do end-to-end work, like some modules and so on and so forth. So we'll probably have a new business stream also probably starting up sometime during the next year. So OSAT is strategic from perspective of getting into new technology and having an integrated play possibility, and then B, it also gives us better, firmer grip on some of these modules and those kinds of businesses, which are going to be the businesses of the future. Whether it's a power module, whether it's a communication module, whether it's a sensor module, the camera module. There are lots of these kinds of modules which are in the area of production, and which we so far have been importing. So those all value additions can happen. So OSAT next year commercial. Yeah.
Okay, so sounding optimistic there too. Lastly, Mr. Sampath, before we let you go, after the kind of performance that we've seen in Q3, how confident are you in maintaining your FY28 revenue target of $1 billion? That translates to roughly 8,500 Indian rupees, 8,500 crore Indian rupees. Slightly long-term in nature, but talk to us about what could be the drivers or milestones that we should be looking at to gauge progress towards this goal.
So US dollar 1 billion number is composed of three different businesses: EMS, OSAT, and PC board. In each of the businesses, we have taken care to make sure that the targets are tad higher than what we eventually will achieve, so that if there are headwinds in some part of the portfolio, at least the others can make up, and then we can still deliver this 8.5, 8,500 crores to 9,000 crores of revenues in FY28. So FY28, $1 billion is pretty much on the cards, and we are marching well towards it. There are a few indicators. One is project progress in OSAT and PCB. The other indicator is the order book, and all three of them are order book in EMS. So all three of them seem to be looking good at this point in time. So we reiterate that we will get to that kind of a number by FY28, $1 billion. And then profitability wise, the newer businesses are a tad profitable, more profitable than the existing businesses. So we think that we can also better the EBITDA number.
Thank you so much, Mr. Sampath, for coming in and speaking with us. Of course, great perspective with regard to Kaynes Tech. Stock doing well today on the back of that commentary coming through. But